Welcome back. You're still tuned into ET Now, and let's now put the spotlight on the real estate sector because one stock is soaring in trade within the real estate basket, and that is Raymond Realty. The stock is up 15% on the back of very strong set of results that it reported. It overachieved its guidance for FY26 and it has a few launches that are lined up in FY27. So what's the outlook? To understand that, we now have the CEO of the company, Mr. Harmohan Sahni. Mr. Sahni, afternoon. Thank you so much for taking your time out and joining us here on ET Now. And first of all, congratulations on the strong set of numbers that you've reported. You had given pre-sales guidance of about 2,800 crores for FY26. It has come in at over 3,000 crores, clear overachievement. What aided higher than expected pre-sales in FY26, and is this sustainable as we head into FY27?
So the launch of new projects was essentially the reason why we were able to deliver more than what we had estimated for originally. And the response of all these new launches from the market also was more than expected that we saw. We saw a great excitement about the Raymond brand and the products that we were introducing in the market. And that has helped us overachieve the pre-sales target.
Right, so FY26 clearly stood out as a standout year for you. But what about FY27 then? And what kind of guidance can you share with respect to pre-sales?
So pre-sales, as far as current year is concerned, FY27, that momentum which we got in Q4 will continue in all respects. In fact, we will be launching more projects in the current year. So existing projects and projects going forward, we have already achieved a 50% pre-sale number. In fact, exact number is 54% has come from outside of Thana, which we had expected to reach by FY27, and we had promised the market participants by FY27 we will hit 50-50 between Thana and non-Thana. Last year itself we did 54, and this will actually improve in the current year. And the guidance that we have normally given is that a minimum growth you can expect from us is 20%. But in FY27, we are expecting that we will do much better than that. And it will be close to 30% growth that we are expecting.
Okay, so 30% growth is what you're expecting for FY27. And what will your collection guidance be for FY27? Will it be at par with pre-sales?
Pre-sales, as far as collections is concerned, collections will improve from what they were in FY26. The number was some 1,700 odd crores that we collected, and that number will definitely grow in FY27 because some of our projects will be at advanced stage at that point in time.
Right, and since we are talking about projects, let's also talk about new launches that are lined up. If you can throw some more color on any major launches that are lined up in FY27.
So we are looking at about 4 launches that we would be doing, and one launch out of that will be in Thana itself, and 2 more launches will happen somewhere in Q2, Q3 in Mahim, and one launch is expected to be in Q4.
So, Mr. Sahni, you have a couple of launches that are lined up. One is in Thane, a couple of JDA projects that are lined up in Mahim and Kandivali here in Mumbai. What is the combined revenue potential of all these 3-4 projects that I just mentioned?
So if we look at just the revenue potential of if you're asking me just 3 projects, then Kandivali itself is about 3,000 crores. And the 2 Mahims put together will be close to about 4,500 crores. That's the total value of the sale units that we will have. So we're talking roughly about 7,000 to 7,500 crores worth of launches.
And Mr. Sahni, you are targeting about 50% of your total annual pre-sales from JDA itself by FY28. Will most of these projects be in the Mumbai metropolitan region, or are you eyeing other geographies as well?
So actually, we have already achieved 50% sale from other than Thana in FY26. So out of the total sale of 3,000 pre-sale of 3,000 odd crores, we did roughly about 1600 odd crores from outside of Thana. So about 54% of my pre-sale has come from non-Thana projects and all JDAs. So going forward, this percentage will actually improve, and it will start inching towards 60% in combined with current year and next year.
And any plans to expand beyond the MMR region? Any other geographies that you're looking at?
Currently, we have been looking at Pune for a little while, and we have yet not taken any exposure there. But yes, Pune is something we are actively considering. But beyond MMR and Pune, we are currently not looking at any other market.
Also wanted your thoughts on the current sentiment that we are seeing in the real estate market. We've spoken to quite a few real estate players over the last few days, and most of them were indicating that they are seeing some bit of demand slowdown. The sentiment has deteriorated due to West Asia crisis. Would you concur with this view on demand slowdown within the real estate market?
Well, as far as our projects are concerned, we have not seen any significant slowdown in any of our projects. Q4 was one of the best quarters we've had in the history of our organization. April, the momentum is continuing, the sales continue to be good, the momentum is clearly there. I think probably some of the other developers could be mentioning, because one behavior we are seeing in consumer is that consumer is taking a little longer to decide on purchases. That could be primarily because of the war situation and the stock market. So the wealth effect is, the sentiment is a little down in terms of wealth effect, and that affects all big ticket purchases. So the inherent demand remains. The economy is going great guns. It's doing well. So it's only a question of consumers taking a little longer to decide. But for our projects, we have not seen any impact of that so far.
Okay, so no impact of demand slowdown, at least on your projects. That's the word coming in. Mr. Sani, thank you so much for taking your time out and being so candid about what your guidance is for FY.